Good morning, everybody. Welcome to the Trading Market Technicals morning call video for Monday, July 16th. New week. Well, we had pretty much of a inside week, actually, I should say. 10-minute chart here, looking straight at it, and you can see we've been really bouncing around, drifting up from 136 to 132, really about 5 points in the SPYs, and really not much happened, just drifting lower from Tuesday's price action all the way down. And then, of course, we had our China GDP late Thursday night indicating that there may be a soft landing for China. Plus, we also had JP Morgan's numbers, which their loss was reported less than what the anticipated loss was supposed to be. So that fueled a little bit of a risk rally, risk on into the day, and actually, aside from the first 20 minutes of the day, half hour of the day, volume really tapered off. And then right into the close, they actually rallied them into the close. So not much here to tell. We are going to have, speaking of JP Morgan numbers, we are going to have Intel come out on Tuesday. Now, as you know, this is going to be very important since the semis have been decimated the last 6 weeks. So this is going to be a really important earnings report, especially how AMD, they already guided lower, and their stock got crushed. A couple of the semis actually guided lower as well, their guidance report. So tomorrow's going to be really key. And if you remember, several years ago, Intel came out with their earnings report right around at this time in July and fueled a huge rally. And that was that inverted, that head and shoulders pattern on a daily chart of the S&P. That was a couple of years back that everybody was talking about it, and then sure enough, never materialized and fueled this huge rally. So tomorrow is going to be very important for Intel and for the markets itself. So that's going to be a big gauge of risk on, risk off. So we're going to really need to pay attention to that. What else do we have? Well, last night's China, and I keep talking about China because this is going to be a big play for China for us. We're going to put together shortly. Right now, all eyes are on Europe. And we're going to need to really, we trade what we see, we trade what the price action is, so we can have our ideas, but let's just let the ideas start to play it out and start working, and we can put that money to work for that idea. Okay, so last night China was down 1.74%. That's going to be the real big wild card here, guys. That's going to be something that we need to really pay attention to. Because if China starts to slow, as we know, they don't buy, they don't start stockpiling commodities become weaker, and then we're going to have a weak market going into the fourth quarter. But as of right now, everything stands that the markets are absorbing what's happening. The news is coming out. Last week we had some negative news. Dollar absorbed the negative news. We had some divergence forming. Well, we did have that, and now we have now that's been negated. We did have Russell actually rallied and took control of the sectors by leading, as well as the semiconductors. They started leading as well. There are cracks, as we know. I've been pointing them out. Bonds. We talked about the USB yesterday. So I wanted to make sure that the longer-term investors realize. If you're swinging short, I mentioned on Thursday, be careful. You might want to tighten your stops. 5 days down, we're going to be looking to expect any type of a rally. And again, any kind of good news when you have 4, 5, 6 days down, we're going to look to either cover shorts or look to buy this market. So that's what happened on Friday, okay? So just really use caution here. I want to get right into the charts. And here's a 10-minute chart of the spiders, as we know. Now I want to get right into the Shanghai SSEC. Now we had 3 days up, and again, this is not anything to be excited about. If at all anything, we're still in a downtrend in Shanghai, and as you can see, we started curling up a little bit. Look at the ratio chart here. The ratio charts are still lower and pointing lower. And now last night we were down 1.74%, so that'll put us down right back in this area here. So this is just a dead cat bounce, and then we're starting to roll. So this is something that's very concerning to me. Looking to be some sort of a bull going in to take on some swing trades, which I do not want to do at this time. Okay, let's take a look at the U.S. dollar. Right, dollar is king right now. We did have a little bit of weakness, and to be expected. Right, 1, 2, 3, 4, 5, 6 days broke out of this area of resistance. So a pullback, some sort of a bull flag, low volume pullback would send the U.S. dollar higher, and that would send commodities and stocks much lower. So we are in this little seasonal tendency right now. There's a little weakness. The next couple of weeks, we should really kick out and start to rally sometime at the end of July, maybe the beginning of August. And that's just historical. That doesn't mean it has to. Let's take a look at our trustee NYMO. Now, we did bounce up from the basically neutral. We were down -9 or something. This here doesn't tell me much as far as overbought, oversold in the markets. Right now, we're still really neutral to slightly up. As you can see here, the SPX. I really get excited when I see these areas up in here when we call the market top a couple of weeks back. And this is a real good trusty indicator. So it's something to keep an eye on. S&P. Above the 50-day moving average. Stocks above the 50-day moving average. Reading overbought again. So, again, this is a concern that we are getting overbought with stocks that are above the 50-day moving average. It's only one indicator. Doesn't tell that we want to sell, but just something to keep an eye on. Copper. And I'm going to bring this up quite often. Copper. To really get bullish and really push this market higher, copper needs to get it back above 4. And that's going to be back from way back in here in this February area. We need to get back above 4, so we have a long road ahead of us to get back above 4 and stay above 4. It could really double top right up in this area and then sell back down again. So copper is something that I'm concerned about. And here's another thing, too. And I brought it up, and I'm going to talk about it again, is the bonds. Right? We have... well, I'm sorry, this is a wrong chart, but let's get to the XPLY. This is consumer staples versus consumer discretionary, and if the market is healthy, we want consumer discretionary, right, retail to really start to move higher, where we have the consumer staples moving higher, basically a safe haven sector. And I did an overlay of the spiders, and I did this, and I wanted to show you with the bonds as well. But if you look at this. We rallying here on this consumer discretionary, rallying higher against the staples. I'm sorry, consumer staples rallying against consumer discretionary. What happened? Market sold off. So it's inversely correlated, right? And what we have here, we have consumer staples rallying against the consumer discretionary, and we have the market rallying. So this is definitely a divergent sign that we want to use caution here. This is a very critical area, so I really want to point that out to use caution. Let's take a look at the junk bonds, right? Junk bonds, high-yielding junk bonds, it's risk on. That favors risk on. But when they start to taper off, that's something to be concerned about. And you can see here, started tapering off, market started selling off, and sure enough, boom, we started selling off here. So as of right now, we're high as well. We're risk on. So this is something that I want to pay attention to going forward, and I'll bring these charts back up again. And let's take a look at the two more indicators here. The put call is at $1, up a buck, starting to curl up here. If the put call ratio starts to increase, what will happen is that S&P is actually going to start to roll over again. So this is something we're increasing as the S&P is increasing. Slight hookup, really nothing much to read into, but I definitely want to point that out. And lastly on the indicators, and we'll go right into our index charts, is the VIX. And as you can see here, we have a falling wedge in VIX. We did break out, but we fell back into the... so that's still a bullish sign for the markets. That's one for the bulls. So that's something that we're going to keep an eye on as well. All right, right into the charts here. Spider daily chart, SPY, back into this rising wedge channel, if you will. And again, lower than expected volume from Thursday to Friday. And it is to be expected, guys, so I wouldn't read too much on the volume on Friday. Doldrums of the summer, Friday, usually we get some sort of either move down or up, and then just a grind into the close. So not much to talk about here, but we are basically neutral in our MACDs, and MACD's starting to curl over in stochastic. So I do like the fact that we're back in the channel, maybe a run up to test the channel. So that's interesting. If you remember, we had our inverted head and shoulders, which measured 138.78, and we did get up there already. So can you call it that we hit the target? I mean, I really think you can, within give or take 20 cents or so. But again, if you feel you need to hit it, so here we still have this in play, so to speak, and then this possibly here would have moved higher and back up to that 1390 area. That would be the S&P, the cash. Then I would say I'd be really use caution here, okay? But IWM's Russell, one of the leaders, nice big move higher from our hammer candle down below. Above the 20, above the 50, and above the 200 now. So, again, looking better. Lighter volume, but, again, it's on a Friday, doldrums of the summer. So let's just see what happens in the next few days. Do we get back up in this area, test the double top, and fail? or do we run higher and make new highs? So that's something that's interesting to say. Transports, leader in the sectors that we follow. Big candle up, big move up, lighter than usual, but our MACDs are crossing over, so we could have, this could possibly form some sort of a divergent high and then start to roll again. So if you notice that we have this stochastic starting to roll again right into this neutral area, so this is interesting, but also a very good sign that the transport started waking up and started taking shape here to the upside. Okay, Qs, same thing. Very weak though, weaker than usual. But as you can see here, we did move up higher. Now we're sitting above a 20-day. We're still above 50, and we're above the 20. So we're sitting right at the 20. But if you notice the other sectors, they are stronger than the Qs. Now that's partly participating Apple being lower the last few days, so it is highly weighted in the index. So that could be a little bit of a sign. But again, like I mentioned, the semis have been basically decimated. So that's something really that we need to keep an eye on. If the semis can't rally, along with, so let's say energy, because energy is also weak here, you're not going to get much of a rally to the upside. Okay? All right, guys, that's really about it. I'll have a full analysis first thing tomorrow. Let's see how this day shapes up. We're down about 3.5 handles right now. So it'll be interesting to see if we get follow through. Again, one day does not make a trend change. So we really want to see this market start to move higher and really take out these last 5-6 days. I really want to see this market take out the highs here out of all of the indexes. And then if we have some sort of a move higher like that, then I say that we have a clear run to the 1390, 1400 in the S&P. And then we would reevaluate. But I do see a lot of cracks in the markets in the intermediate term, so we really need to pay attention to that. Have a great day, everybody. We'll see you tomorrow. Take care.